What you're looking at on the screen right now is what a single month of really good trading looks like. Not perfect, but really good trading. Ending the month off with nearly a 9% return on initial investment. To put things into perspective, let's take the S&P 500 index fund. This all takes place in the stock market, by the way. The S&P 500 index, on average and on a yearly basis, gives you about 6 to 7% return, inflation adjusted. 6 to 7% on a yearly basis. Let that sink in for a moment. I made that in a single month. Now, before we get into the specific method that has enabled me to achieve that level of success, and by the way, if you don't think 9% return in a single month is good, you're obviously working under a false and misleading framework. But don't worry, the market has a tendency of humbling its victims, given enough time. To start things off, I'm going to go over some doubts you may be having, considering this type of introduction, and maybe even the thumbnail. The first question you may be asking, or at least should be asking, is, has this trading system been consistent? Great question. And my answer to that is, insufficient data for a meaningful answer. The truth is, this is only 1 month's worth of data, albeit good data. I do have data on previous trading activity, dating back as far as mid of last year, but there's a problem with this data. It's mostly riddled with mistakes on my part, human error. The mistakes vary. Some are small things like accidentally adding an extra zero at the end of a limit order. Other greater, more complex mistakes are things like misreading the chart entirely and trading a setup that isn't the one I'm looking for. I say complex because this has obvious psychological implications, as one can easily make themselves believe that the pattern they're searching for is there when in fact it is not. This is prime psychology for another video though. To summarize, the previous data sets that I've collected in the past months is good, insofar as showing me where I stand as a trader. This includes my psychology, technical analysis, platform skills, and just building a routine. The data definitely satisfies these things, but in terms of determining whether the strategy is profitable or not, well, I simply need more data. Not only more data, but I need clean data, hence the making of this video. The 8 trades you see on the screen right now are the cleanest set of trades I've managed to put on in my 6 years of trading. Can you believe that? 6 years of trading for this. All jokes aside, 9% is really good. But unfortunately, 8 trades is not enough. Like I mentioned, I wanted to be performing like this every single month for the rest of my life without fail. But fortunately for me, I already have the framework to facilitate these good trades. I also already have the routine in line, which is a huge factor when it comes to trading successfully. My ability to recognize the ideal setup is also improving, hence the drop in trading frequency, which you could easily see looking at older spreadsheets and comparing it to last month's spreadsheet, which is on April. 8 trades in a month is definitely conservative, but it's good. So clearly things are on a steady upward trajectory. The second question you may be asking is this real money? Here's where I lose most of you guys, but it's imperative that I ignore this fact and do what is right for me and not what feels right for you. But the short answer is no. There is no point in trading real money without having a clear picture on the risks involved and a clear understanding of how a real trading system works. You're better off gambling in Las Vegas. Here's my real thinking on this though. Trading in these conditions does not offer me the full picture of live trading, since it eliminates the emotional factor of trading with real money. At least that's what some of you may be thinking. But let me ask you something. Is there really much emotion involved when you already know the system you're trading will predictably yield a profit at the end of every month? Is there any real emotion when you know that every single trade you take, you cannot lose any more than 1% of your account size? The answer is almost always a no. There is almost no emotion involved. This will do anything but make you emotional. It actually gives you a psychological edge in a way. Trading with the real understanding of how trading actually works eliminates most, if not all, emotions. But to this, I will say, after completing 30 clean trades, including these 8 on the screen, so another 22 trades to go, I will commit $10,000 to a brand new trading account in which I will upload not only my spreadsheets, but my actual brokerage statements. I'll do this at the end of every month. As the channel's name implies, I'll keep things transparent and genuine, as best as I can when it comes to these things. Now, these are just 2 questions I've conjured up in my mind. I'm sure you have plenty more of questions. So I invite you to comment down below anything you like. For something more tailored, you can also just send me a direct message to Discord. I hope you keep these things in mind. I'm still very well a beginner in the markets, even though I am currently entering a very interesting phase in my career at this point. One where profitability is not just this one mysterious and distant idea, but something well within my reach now. To start off with a strategy and my 8 trade progression into this endeavor, I want to make it clear that the result of a trade does not determine if it was a good trade or bad trade. In other words, a good trade will always be a good trade regardless if it was a losing trade or a winning trade. The same can apply to a bad trade. You can and will get rewarded for bad random trading. And what I mean by good and bad trading is simple. When looking at a new potential trade, ask yourself, is this pattern that you're looking at right now close to, if not identical to, the pattern you previously claimed to be your pattern, your setup, when forming the strategy? If the answer is no, there are no similarities between this chart and the ideal chart you have on the strategy, then it was a bad trade. If the answer is yes, There are clear similarities between this chart compared to the idealized chart in my strategy, then you have yourself a good trade. You may need some time to think about these things, hence why I suggest to everyone to start off with swing trading, which gives you hours, if not days, to make decisions before pulling the trigger, as opposed to day trading, smaller time frames like the 5 minute or the 1 minute, where decisions are made in minutes. By the way, every chart I bring up in today's video will always be based on the daily time frame, meaning that every candle you see on the screen will represent 1 day worth of time. So now that we know what is classified as a good trade and what is not, let's take a deeper dive into the specifics. There are 3 main criteria when evaluating these charts. Number 1, the aggressive green bar, otherwise known as elephant candle, engulfing bar, whatever you want to call it. It is an aggressive green bar or a green candle that, as the name implies, engulfs many previous bars. Now there are some caveats to this aggressive green bar, one being that the candle needs to close relatively high compared to the candle's wick. But this should be obvious. Just keep in mind, the bigger the wick on either the top or the bottom means the strong candle might not be so strong after all. And the same goes to your chances of having a successful trade on a setup like this. So just avoid candles with big wicks completely. Number 2, so this is the second criteria to look for, resistance, otherwise known as the range. It is essentially an area where price tends to consolidate and move sideways, sometimes showing micro uptrends, other times showing downtrends, but the range should be clear hesitation on both parties, sellers and buyers. A clear area and sometimes a line where selling pressure is prevalent and buying is also prevalent, kind of like taking the impression of waves. Now my job here is simple. Outline this clear area with the main focus being on the resistance, so the top side of the wave or of the range, where sellers are most prevalent, and the whole point of this being that once this trend or herd-like behavior gets disrupted with an aggressive green bar, which we spoke about already, all hell breaks loose. Panic from short sellers ensues, euphoria and FOMO kicks in from the buyers, and I'm right at the break of this chaos, attempting to capture an even greater move. I'll typically end up selling my cheap lot to even greedier people willing to buy at a much higher inflated price. Excitement quickly turns into greed with a couple of days after the breakout, so I wouldn't hold these any more than a couple of days. Or if I'm wrong, I'll end up selling at a loss to someone that might know something that I don't. But going back to the resistance topic, I personally like a minimum of 1 touch point, but obviously the more touch points the better, but 1 is good enough for me, especially combined with data, which brings me to the next caveat of this criteria, which is data. Is the range or resistance old enough to be relevant today? Has it been in the range for a long time? If you haven't guessed, we're looking for stocks that have been in a consistent range for a long time. This makes it more credible and really more powerful when that range eventually gets broken by the aggressive green bar. Think of it as a spring building more and more tension till someone pushes it off balance. You want to get into stocks that have been in a long-term range and have just exploded to the upside, with you being the first in line. The more daily candles within the range, the better. If it hasn't been obvious enough for you, I'm looking for range breakouts. You can end this video right here and probably have some success, but there's still one last criteria that adds even more confirmation to my trading, and that is number 3, volume. Without overcomplicating this one, volume is essentially the amount of shares being bought and sold at any given moment. So I'm going to go over the very last trade that I actually took on this spreadsheet right here, just to explain to you guys the significance of volume when it comes to entering really good setups like this. So if we zoom in a little bit, you'll notice that we have a massive spike in volatility right here, so in volume. And if we look over here to the left-hand side, you'll notice that we have a little taskbar over here on the left, which measures the amount of volume as I hover over a little candle down here. And you'll notice that the typical average is right around 200,000, 300,000 in some cases. But it isn't until we get to this level right here where we actually reach 9 million shares bought and sold on this particular day. And what do you know? We actually have the breakout of the resistance and we have the aggressive green bar. So those 3 things combined is precisely what I'm looking for. And the volume is what really wraps all these things up and gives me the ultimate confirmation. This is literally the bunny footprint right here. So you see a whole bunch of transactions and you see a breakout, an aggressive green bar, so a movement to the upside, and what do you know, we had a really impressive move right here, actually reaching our 75% target, which we'll be discussing in just a moment. Alright, so I'm realizing that the video is taking a little longer than I anticipated. It's my first time creating this type of video format, so bear with me here. I'm going to purposely leave out small details, like where exactly to enter, where to exit, share size, and the trailing methods that I use. These are all easy things for me at this point in my trading career, with the latter being the hardest. But if you do want a deeper dive into this, leave a comment down below, and for sure I'll drop a video going deep into the specifics, even including some advice on how to incorporate AI to assist me with my entries and exits to make things easier for you. But if you want some words of advice, I'll just say this: try to focus on practicing and repeating the same technique over and over again. This part of trading is mainly a matter of routine as opposed to knowledge. You most likely already know how to read charts and use trading tools, but you haven't built the mental muscle to execute these trades every single day. That's probably the problem, and I just gave you the solution. I'll see you guys in the next video. Stay focused.